Hello, students. In this topic, we will discuss about goodwill, nature, and valuation. Okay. So I asked you before to go through the theory of goodwill because it is already mentioned in the book and it is very simple. Okay. So you don't have to worry about it. You don't have to go in depth also, but still a few points are there. You just need to know about it. That what is goodwill? Okay, and what are the methods of calculation of goodwill? Okay, and just the formulae and when and how to calculate the goodwill. Okay, now goodwill, first of all, you should know that it is an intangible asset. Okay, and it is associated with the reputation of company's name or brand value or the good name in the market. As the name is saying, the goodwill. Okay, goodwill, so it is about the good name of the company or its product in the market. And this goodwill can be monetized. Okay, that is, it can be measured in terms of monetary value. That is why we are uh, calculating goodwill in terms of money. Okay, so let us see what are the key points or key areas about the goodwill. Okay. So first of all, goodwill is an intangible asset. You should know that. Okay. By intangible asset, we mean those assets which cannot be seen and touched physically. Okay. So intangible assets, they do not have the physical existence. Okay. They are non-physical assets. Goodwill also include the proprietary or intellectual property and brand recognition, which are not easily quantifiable. By quantifiable, we mean those items which cannot be converted into quantity. For example, the brands like especially the Chinese brands now, because India and China talk is going on. So let's just talk about the Chinese brands. However, it should be boycotted in India. I personally believe so. Okay, so the companies like Vivo, Oppo, Xiaomi, these all are selling mobile phones in the market, isn't it? So these are the brands. Okay, so Xiaomi, what did I say? Oppo, Vivo, yeah, OnePlus. These are the brands. So you cannot quantify the brand of a particular company. Yeah, it is true that you can say that this particular brand is selling this much of mobile phones in the market. Let us say OnePlus, it sold in its first week of the launch of OnePlus 8. Okay, so let us say the number was for 35,000. So OnePlus, it sold 35,000 mobile phones uh, in the first week of June. Let us just say that. So this 35,000 is a quantity. It is a number, isn't it? But you cannot quantify the brand value. This OnePlus, you cannot quantify into anything. Okay, so goodwill cannot be quantified. Now, this point number three, I don't want to discuss right now because we will see this afterwards. Okay, so just keep this point number three in mind that it is somewhere related with your purchase price or the purchase consideration. Okay, just keep this in mind. Point number three, we will discuss this afterwards. Now, point number four, companies are required to review the value of goodwill on other financial statements at least once a year and record any impairments. So let's just break this sentence into two halves. So let us just discuss first about this, the impairment in the financial statement. What do we mean by that? By impairment in the financial statement, we mean that some kind of discrepancy is there. Okay, maybe there is the deficit of amount in the asset column of a company. So that deficit, it may arise, okay, when you calculate the value of the assets and liabilities. We do it quarterly or half yearly or annually. Okay, now since the GST can be paid quarterly. Okay, so it has been made compulsory for the big organizations to prepare the financial statement quarterly also. Okay, so this statement mostly the importance is given at the end of the year, that is at the end of the accounting cycle, which is your 12 months. Okay, let's just for our discussion, let us just keep it to be annual. Okay, so when we do uh, auditing of all the books of accounts, okay, by auditing I mean the process of checking of books of accounts, okay, whether there is any discrepancy or not, okay, if there is any kind of fraud involvement or not, okay. So it is just to check whether the accounts are prepared following the accounting ethics or not, okay, ethics and principles. So it should be noted that auditing is a process which starts where the accounting ends. Okay, so when you do the auditing, some impairment can be found. So that impairment is termed as your goodwill. So if there is a deficit of say 40,000 in the asset column, okay, so that 40,000 will be now adjusted through capital account. So this is how we find the goodwill. Just like in hidden goodwill, we found how the the goodwill is found, isn't it? But we saw that aspect of hidden goodwill through the liability column or through the capitals of the partners. But there is one more aspect of the hidden goodwill which can be found through the asset column, and it is that. Okay, so goodwill is different from most of the other intangible assets, having no indefinite life, while most other intangible assets have a finite useful life. Uh, it should be noted again that goodwill is different from other intangible assets. Okay. And goodwill has indefinite life, whereas the other intangible assets they have a finite useful life. For example, patents, copyright, okay, brand value. So trademark, they have a finite life period. Okay, so after a certain period of time, those rights will be gone. It will cease to exist. Let us say a particular company, it has the patent, okay, the right to patent for 5 years. Okay, for example, now there is a company in the Indian market called Glenmark. Okay, so Glenmark is a company which is um, producing the medicine for COVID-19. Okay, so it will be available in the market after a week or two. It will be named as I don't know. It's something. It starts with F. Okay, I just forgot. Okay, I just remember this name and I forgot now. Anyway, this tablet will be available for 100 and 103 rupees in the market. Okay, so now this Glenmark has the patent of uh, producing that particular medicine in the market. So it will be producing for the next 5 years. Okay, but after the 5 years, it will possess no patent. Then it will not be able to produce that particular medicine. So by this finite lifetime, we mean that this patent, copyright, or brand value, uh, it is for a certain period of time. After some period of time, it will be gone. But goodwill, but in case of goodwill, we cannot see that finite life period. Okay, goodwill has indefinite lifetime. But here is a matter of concern or observation, or you can say a matter of discussion, that goodwill also has a finite lifetime period. Okay, and we do depreciate the goodwill. Yes, we do so. Okay, and when we do depreciate the goodwill, it is called amortization of goodwill. Okay, because any asset in accountancy, there is a concept of depreciation, which is very much controversial topic regarding this depreciation. Okay, I don't want to enter into the great depth here, because I have already personally I have been gone through many things regarding this depreciation. I don't want to discuss about depreciation in that depth. Anyway, so there is a concept in accounting that any asset, it depreciates after certain period of time. Okay, so uh, even in Bhagavad Gita, I don't know exact the verses. It is mentioned about the depreciation. Okay, so this depreciation is a continuous process, and it is a universal fact. It is true. Okay, so everything it depreciates. But what about the depreciation of the intangible assets? How can we depreciate the assets which we cannot see? Isn't it? How we can depreciate or decrease the value of those assets which are completely intangible. So that is why, just to distinguish between this depreciation or the decrease in value of tangible and intangible assets, the terms have been used. Okay, for tangible assets it is called depreciation, and when intangible assets they get decreased or depreciated, we call it amortization. Okay, so depreciation for tangible assets, amortization for intangible assets. Okay, so that is not a part of our syllabus, but as I found in the books, so I just recorded here. Anyway, so this is also a very interesting thing here. Okay, so if you want to read Indian accounting standards, it is available. Okay, it is available in market, but I uh, prescribe you to buy from the government website only. Okay, this copy of Indian accounting standards, it costed me only 160 rupees. Okay, so anyway, in accounting standard, if you just check the accounting standards, okay, accounting standard number 103, okay, in appendix A, okay, of 2019, which is a revised Indian accounting standard. Okay, out there the definition of goodwill is mentioned. Okay, an asset representing the future economic benefits arising from other assets acquired in a business combination that are not individually identified and separately recognized is termed as goodwill. So I will discuss this point also. Okay, when we move on to the further section of the lecture. So just keep this in mind. Okay, this point number three and this particular definition of goodwill. So what Indian Accounting Standard 38 has to say about goodwill? Because in many textbooks, okay, you can see this. Still, I am refraining myself from stating this point, but I'm sorry, I have to tell you this point because this is a very nice topic, okay, and it is not from our syllabus, okay. I'm talking about this thing out of syllabus, okay. You should know it. What Indian Accounting Standard 38 has to say about it, okay, about the goodwill. Let me tell you that. In this accounting standard 38, number 38, goodwill has been clearly distinguished from other intangible assets. It has clearly said that goodwill is intangible asset. Yes, it is intangible asset, but it is a different kind of intangible asset. Okay, it is related with tangible as well as other intangible assets. So it is somewhere between, it is lying somewhere. Okay, you cannot put it in the uh, tangible asset first of all, because goodwill you cannot see and touch. Okay, you cannot classify goodwill as tangible asset first of all. Okay, and you cannot classify completely uh, it as intangible asset also. Okay, it is intangible asset, but it is related with other assets also. So goodwill is a very special kind of asset for us. Okay, so maybe in your textbooks or other textbooks, you may see this accounting standard 26. Okay, yeah, previously it was accounting 26, but now it has been changed to accounting this standard number 38. Just like in class 11, okay, many times I have referred to class 11 because many things are there in class 11 that you should have learned. Okay, anyway, before this, many things have been mentioned out there in the Indian accounting standard. Okay, there are many chapters regarding this Indian accounting standard, or if you just turn the pages, you can see that. Okay. Anyway, now let us come to class 12. Let me just give you one information that previously this preparation of financial statements of companies, okay, making the balance sheet of companies. It was involved in Companies Act 2013, in sorry Companies Act, this 1956. It was kept in the Schedule 6, okay, making of financial statement of companies. But when the Companies Act was again re-amended, okay, on September 2nd, 2012, 2013, it was re-amended, okay. The bill was passed already in the month of August, so it was implemented from September. And from that time period, now there is no Schedule 6, okay. You cannot find the making of balance sheet in Schedule 6, okay. Schedule 6 is present, but it talks about something different, okay. If you want to find about the making of balance sheet of company, then you have to look at Schedules 3 of the Companies Act 2013 re-amendment, okay. Anyway, now let us move further. Let us come back to the topic of goodwill. Features of goodwill. Yeah, it is true that it is an intangible asset, okay. Goodwill is an intangible asset, it is true. Now, feature number 2, it does not have an existence separate from that of an enterprise. Yes. Now, if you closely look at this definition as per the Indian accounting standard, you can see here that they are not, sorry, that are not individually identified and separately recognized. You can see here the feature number 2. It does not have an existence separate from that of an enterprise. Yes, goodwill is inseparable, okay, from the enterprise. For example, if you say, let us take an example of a teacher, okay. A teacher is a person, isn't it? A physical human being. Uh, a person or a teacher is an is a tangible asset, isn't it? You can see and touch the person, isn't it? But his knowledge or his potential, you cannot see it in see it through your eyes, isn't it? You only can experience his service, isn't it? So that service is the intangible asset. Similarly, whatever the brand you are consuming, okay, be it in terms of food items or be it in terms of garments and other forms of clothings, and in terms of mobile phones or computers, etc. Okay, so whatever the brand value or the goods you are using, okay, it has a particular brand, isn't it? So that brand is actually the goodwill. Let us just assume it to be for a time being, okay, just to understand the concept of goodwill in a very simple way. But it should be noted that brand is not equals to goodwill, okay. Just note that down, that goodwill is not equals to brand, first of all. For an instance, we are just assuming that goodwill is the brand. That is, for an example, we are assuming that goodwill is equals to brand. For example, now you are using iPhone. Let us just say that. Okay. Now that iPhone, it has a goodwill in the market. Okay. So many people are using that goodwill, isn't it? I mean the product. Okay. So that mobile phone, it has got the goodwill, but that goodwill, it cannot be separated out from the company, from the Apple company. That goodwill cannot be separated out, isn't it? So by this separate existence, it means the same thing, that whatever the technology Apple mobile it brings, okay, whatever the service it provides, so that because of that service, because of that uniqueness, it has got the goodwill in the market, isn't it? If this iPhone, if it was similar to other Android mobile phones or other forms of smartphones, then this Apple company mobile phone, it would not have the same goodwill in the market, isn't it? So because of the other input, it has got the goodwill. So goodwill is not separable, okay. Goodwill is completely inseparable from that of an enterprise. Now point number 3, it helps in earning higher profits. Obviously, if there is goodwill in the market of that particular company, it will definitely earn higher profits. Nowadays mobile phones, this let's talk about this iPhone only, okay. It is sold in the market for a very high price, isn't it? but still the people, they are taking this mobile phone, okay, buying this mobile phone in terms of EMI, in terms of installment, okay, taking loan from someone and buying the mobile phone. Why? Because they have to buy that mobile phone, because the goodwill is in their mind. So when the sale volume increases, automatically the profit also increases. Okay, now point number 4, it is an attractive force which brings, yes, just now I was saying that just because of the goodwill, okay, just because of the image which is in their mind, that, oh, I have to buy this particular mobile phone, this is iPhone, so I have to buy it. So this is actually an attractive force which brings in the customers regularly to the place of business. Let me give you one more example. Okay, if you go to a particular shop or a restaurant, okay, weekly, with your family and friends, to have something, okay, something to eat. I saw that coffee cafe day also, okay, uh, in the bazaar, isn't it? There is a coffee cafe day. So you go to coffee cafe day, all like after school or maybe once a week. You go to that place. Why you go to that place? Because there is an attractive force, okay, inside the mind, isn't it? So it is completely a psychological factor which pulls the customers towards it. Okay, so goodwill is the same. Maybe maybe they provide you the better service. Okay, so maybe you like to go to that place. Okay, so goodwill is that attractive force. Now point number 5, it comes to existence due to various factors such as locational advantages, favorable contracts, brands, trademarks, patents, market reputations, etc. Yes, goodwill comes, goodwill comes into existence just because of these following factors, like the locational advantages. Let me tell you the same example, the coffee cafe day. If this coffee cafe day was located in a very remote area, okay, then nobody would go to that place. Why? Because it doesn't have the locational advantage, isn't it? Nobody would know where the where the coffee cafe day is, isn't it? So coffee cafe day has got the locational advantages. So whoever comes to Kalimpong, the people, including the tourists, they visit the place. Okay, coffee cafe day. Now it has maybe the contract is favorable. Okay, uh, by favorable contract we mean whoever takes the contract is in favor of them. Okay, for example, if that coffee cafe day has taken uh, the land in a lease, let us just say that. Okay, now the lease time period is more and the amount is very less. So obviously the contract is in favor of that coffee cafe day. Okay, because the lease time period is very more, okay, let us say 50 years. Okay, and the amount is very less, let us say 50 lakh again. So in 1 year they only have to pay 1 lakh rupees, isn't it? So they are paying very less compared to the advantage that they are taking out of. Okay, so other things are there like the brands, trademarks. So you can know now. Now the value of goodwill is subjective as it depends on the assessment of valuer. Yes, it depends upon the customer also. Okay, so some customer, they may prefer Oppo phones uh, over the other category of mobile phones. Okay, some may prefer Samsung phones. Some may prefer to have OnePlus mobile phones. Some may prefer to have Google Pixel. Some may prefer to have this, what this is called, other forms of mobile phone. Okay, so it depends upon the customer. Okay, so whoever is valuing the amount of goodwill, so it depends on that. So the goodwill is completely subjective, it varies from person to person. Okay, now in the context of partnership, okay, it is the value of share of profit sacrificed by the sacrificing partner. And for the time being, okay, because we are in class 12 and as per our syllabus, we just have to focus while studying this partnership chapter, that goodwill is the value of share of profit sacrificed by the sacrificing partner. Because whoever partner comes into the business, okay, a new partner, so the existing partners, they have to sacrifice from their share of profit and give to the new partner. So the existing partner is sacrificing, isn't it? So for that sacrifice, whatever he is making, the new partner is supposed to bring in the share of premium for goodwill. Let me tell you one just a simple example. Okay, uh, only you and your mother is in the home. Okay, and one person, one guest, okay, let us just say that I come to your place, for example, okay, and you have prepared food for only two persons, okay, two piece of roti and two piece of say eggs is there, okay. Now what you have to do now when I come there, okay, as a guest, now you will share those food items with me, isn't it? Now you will cut off your from your own food amount and you will give the same to me. So uh, the same thing happens when the new partner comes into the business. Okay, that is why for the sacrifice of the sacrificing partner, the gaining partner, as I already said, that new partner is always a gaining partner. So for this, the gaining partner has to give some portion of goodwill to the sacrificing partner. Okay, now, need for valuation of goodwill. Okay, so when there is change in the profit sharing ratio, you have to value the goodwill. Okay, and whenever a new partner is admitted, again you have to value the goodwill. And again, when a partner retires or dies, you have to value the goodwill again. And when the partnership is sold as a going concern, or when the partnership is being taken over by some other form of company, then you have to value the goodwill. Okay, this point number 5 and 6, it mentions that it is same. Okay, yeah, this point number 5, amalgamate. Okay, by amalgamation we mean the combination of two companies. Okay, just now uh, you must have noticed that cars, okay, mostly the cars, they go into this kind of amalgamation. I will give you one particular example. Maruti Suzuki. Okay, Maruti Suzuki is an amalgamation. Okay, when two firms combine together and they operate together. Okay, this is called amalgamation. Uh, this Maruti is an Indian company and Suzuki is a Japanese company, isn't it? So they together uh, as a partner, or the two entities, but at the same under the same umbrella, they manufacture the cars and sell in the market. So this is called amalgamation. Okay, and sometimes the partnership may be converted into a company also. Okay, that is actually the expansion, or you can say the external reconstruction of the partnership. Okay, now factors affecting the value of goodwill. I think you still have remembered this point number 3. Okay, we will discuss this point number 3. Okay, now now we are nearing that point. Okay, okay, factors affecting the value of goodwill. Now, what things are there? Okay, what factors they affect the value of goodwill? Okay, how the goodwill is affected now? Okay, now let us say these points are there. Okay, you can minimize or maximize these points also. You can add your own points also as per your level of understanding. Let us just discuss this in brief. Efficient management. Okay, so the management, okay, the working committee of that particular firm may be very much well efficient. Okay, and they have a very good customer relationship. Okay, so they may promote their sales also time to time, and they maintain the business properly. They maintain the hygiene of the shop. Okay, so just because the management is efficient, automatically they will have the goodwill. Okay, if you go to a restaurant, okay, to have to eat something, and the restaurant is very much nice decorated, okay, and the waiters are also well mannered, okay, they wish you, okay, they greet you with a smile and they serve you food properly, obviously you will like that place, isn't it? But if you go to a place where the shop is very much dirty, okay, everyone is spitting around, and the uh, plates are just lying over there, okay, and many flies are flying, okay, and the waiters are very much rude, and they do not uh, perform very good service, then obviously you will not go to that place. You will just say that to your friends also, that do not go to that place. That place is not nice. That place is filthy. Okay, so the goodwill is now decreased here of that particular place. Okay, but if the place or the restaurant is very nice, obviously the goodwill will be very nice, and you will also suggest your friends and other family members to go to that particular place because it is very nice and the waiters are also well mannered. Okay, now favorable location. I talked about this coffee cafe day. If the business is located in a very nice place, then obviously it will be in the eyes of the public. Okay, so whenever the company, if it is established in the very center of the market, obviously it will get the attraction. Okay, so let us say the total population of Kalimpong is 100. Okay, maybe the 100 people, they do not go every day, okay, but still it will be in the eyes of the public constantly, isn't it? So they will be attracted to that place, and they will go and uh, consume whatever they have to. Okay, so because of the goodwill, it may get the sorry, because of the favorable location, it may get the goodwill. Okay, maybe let me give you one more example of this goodwill. Okay, even if you have not went to that place, coffee cafe day, okay, let us just assume that, okay, you have never went to that place, coffee cafe day. Like I personally, I haven't gone to such kind of places. Okay, because first of all, I don't have time also. Anyway, if you go, oh, sorry, let me just come back. Okay, now to the example. You may say to your friend to come near that coffee cafe day. I'll be waiting over there. So even if you don't go to that coffee cafe day place, but still you know that coffee cafe day is there. So this is how the name of that particular place, it goes on and on. Okay, this is how the reputation is built up in the market. So that is the goodwill. Now, I talked about this favorable contract also. Now, let me not stress on this point. Now, longer establishment of business. If any business is running from a very long period of time, okay, obviously that business will have the goodwill. Okay, you can take example of any medical shop, okay, from the market. Okay, I do not know in person. Okay, I'm new to that area. So you can just name a very good place like medicine shop, or maybe a very good place to eat, or maybe a very good shop where you can buy the garments. So if that shop is from a long period of time, okay, if it is established from a very longer period of time, obviously that goodwill will be built in the market. Okay, now advantage of patents also. Yes, by patents we mean the right to produce some kind of product, okay, using a particular technology. Okay, so this kind of this the patents, okay, it is mostly associated with the technical this technology or methods or formula. Okay, like the medicine which I talked about, it has got some formula, isn't it? Now, two or three chemicals are being mixed together, and a new medicine is formed, isn't it? So, because of the advantage of patents, also they may have the goodwill. For example, KFC items. Yes, uh, KFC, it has got a patent, isn't it? And no other form of business can produce the same item, isn't it? Because it has kept the patents with them, isn't it? And because of the patents, they may have the advantage of getting the higher goodwill in the market. Okay. Now, access to supplies. By this access to supplies, we mean that they have got the access in the market. Okay, and they do not have the difficulty in getting the raw materials. Okay, and the quality of product. Yes, first of all, this quality of product, it should be there. Okay, uh, again, let me take you to that coffee cafe day place. We go to that place because I have heard that you get the coffee fresh, okay, in front of you only. They grind the coffee in that machine and they serve you the coffee. Okay, I haven't been there, but I have heard. So the quality, it should be maintained, well maintained, isn't it? So we prefer the quality products only. This Indian uh, let me tell you the psychology of the Indian consumers, that we want the items which are best but in the but in the cheap amount, isn't it? So we want what is cheap and best. So the firm or the company, it has to focus in the quality of the products. So if the product is already having a high quality, then the goodwill will also be raised in the market. Okay. Now, market situation. The market situation, by market situation, we mean a market condition. Okay, maybe it is under recession period, or maybe the boom stage, or maybe under the recovery stage, or maybe under the depression. So, depending on the market situation, also the goodwill may be affected. Okay, if the company is selling a very like this COVID-19 situation, let me give you. Okay, as I already said in the previous video, that we are under the period of recession. Okay, the world economy is going down, but still the Tata company, it decided to give salary to all the workers. You must have heard in the news channels. Okay, they decided to pay all the workers the full amount of salary. So what happened? Now those who are working in the company, they felt very happy, isn't it? Now they will be more loyal to the company. And those who are not working, but they got to hear that the company has paid the entire salary to the workers, the 100% amount of salary to the workers, isn't it? So now this brings the good name of that particular company in the market. So this is how the goodwill is built. Okay, so other things are also there. Okay, let me just skip these points and move on. Now, the types of goodwill. Yes, this is important for us to know from the point of view of our syllabus. Okay, types of goodwill. There are two types of goodwills. Okay, other forms of goodwill are also there. Okay, but let me just tell you these 2 points only. Number one, purchased goodwill, and number two, non-purchased or self-generated goodwill. Now, what do we mean by the purchased goodwill? This purchased goodwill is associated with this point number three. Now let me describe in detail that what is the purchased goodwill. Now let us take two companies for example. Okay, let us just take two companies for example. Now let us just say that company A and company B. Okay, now company A purchase company B. Okay, now, are you understanding? Okay, company A and company B. So, company A, it paid rupees, let us say, 1,20,000. Okay, the amount is very simple, just for the calculation purpose. Okay, the amount is 1,20,000. Let us just say that. Okay, and the actual amount of the business is 1 lakh. Let us just suppose that way. Okay, the actual amount of company B is 1 lakh, but company A, which is acquiring company B, is paying 1,20,000. Why it is paying extra 20,000? It is paying extra 20,000 because it has got the goodwill. So assets minus liability, as you can see here, the purchased goodwill is which is associated with the purchase consideration. Okay, is called the purchased goodwill. So let me just read it out. What is written here? Purchased goodwill is that goodwill which is acquired by a firm or a by a firm for a consideration. By consideration, we mean purchase consideration. Okay, whether the amount is paid in cash or kind. Okay, so the example is mentioned here that when a business is purchased and purchase consideration, the amount which you pay, that is, in my example, company A was paying 1,20,000, isn't it? So this purchase consideration is more than the value of net assets, isn't it? So the value of net assets is assets minus liabilities. Okay. So in other forms also, if you calculate the value of goodwill, assets minus liability will be your goodwill. So when the net assets are less and the purchase consideration is more, then at that point of time it is called purchased goodwill. Okay, or it may be termed as hidden goodwill also. This point number one. Okay, please remember this point number one very well, because we have to apply the same thing in the further chapter. Okay, the chapter of this issue of shares and issue of debentures. Okay, there is a particular topic out there. If you turn the pages of the book, you will see that um issue of shares for a purchase consideration, or issue of shares for other than cash. Okay, if you will see the heading, and under that heading you will have these kind of questions. Now, point number two, non-purchased or self-generated goodwill. Yes, this goodwill is self-generated or internally generated because of the hard working of the employees and the management. Okay, the entire team, it works for the for making the name in market, and it makes the name. Okay, so this is how the goodwill is created. Let me give you one example. uh, this bike, you must have noticed, this Royal Enfield, isn't it? Royal Enfield, it doesn't do advertisement, it doesn't promote its sales also, but still it has got the brand value. Okay, many bike riders, they prefer to have this bike. Why they have to buy this bike only? Because the workers or the team of Royal Enfield, they have worked hard, and they produce the bike so well that the riders, whatever they their specification is, so they manufacture or modify the bikes as per the requirement of the riders, isn't it? So this is how the goodwill is generated. Now let me give you one more example. If a new shop is opened, okay, um, let us say uh, a shop, okay, a shop of tea, let us say, okay, a tea stall. Let's say the shop's name is Morning Tea. Okay, now this shop, it may want to have the goodwill in the market, isn't it? So in order to build up the good reputation in the market, the team, the entire team, okay, the management team as well as the workers team, including the waiters, they have to work for the betterment, they have to provide better service to the customers, then only the goodwill will be established. Okay, and this is called self generated goodwill or non purchased goodwill. Okay, now let us move on to the calculation of valuation of goodwill. Okay, so for this calculation purpose, you have three methods. Okay, method number one, average profit method; number two, super profit method; and number three, capitalization method. Now this average profit method, it has got two sub variants. Okay, number one, simple average profit method, and number two, weighted average profit method. Okay, they both are average profit only, but it is only a difference in terms of weight. Okay, now capitalization of super profit method and capitalization of average profit method, you can see under this point number three, capitalization method. So capitalization method also has got two parts. Okay, now let us see the formula of each one of them. Average profit method, you have to calculate first of all average profit. Okay, you have to calculate average profit and then goodwill as laid down in the formula. Okay, after that you have to look at this uh, formula of weighted average profit method also. It is same thing, okay, but it is slightly different from the average profit method. Okay, weighted average profit method and average profit method, it is slightly similar and slightly different. Okay, we will see when we do the numericals, but just go through the formula. Okay, I will not explain the formula because you have to learn this formula, isn't it? So if I have to explain this formula, then it will be very lengthy. This video will be very lengthy. Okay, and the explanation of the formula, it falls under the category of rational. So if you want me to explain and prove the formula, we will be doing so in a next video or a new video. Okay. Yeah, super profit method. I want to explain this point because as you can see here, many things are there, isn't it? Like in this average profit method, weighted profit, weighted average profit method, you just have the simple formula, apply the formula, okay, put the variables and get the figure, isn't it? Get the unknown. But here in super profit method, you have many things to see here. First of all, you have to calculate the super profit, and for calculating super profit, you must have average profit. Okay, and after getting this average profit and normal profit, you will get the super profit, and goodwill will be calculated as it is. Okay, now how to calculate the normal profit? How we calculate the normal profit? This normal profit will be this, as you can see in the formula, that is capital employed into rate of return by 100. So this rate of return is also known as just return, okay, return on capital. So it is same only, okay, and sometimes it is also known as return on capital employed, and sometimes this normal profit is also known as the return on capital employed. So the terms are used interchangeably, okay, so do not get confused. Okay, so normal profit is also known as return on capital employed, or ROCE. uh, Now how we calculate the capital employed? Okay, we will calculate normal profit using the formula, that is capital employed into rate of return by 100. Okay, but how will we calculate the capital employed? If the capital employed is not given, then how will we calculate this capital employed? See, I will tell you a very simple approach of capital employed, okay, which is not mentioned here. You just copy this formula, okay, and learn this. But I will explain you what is not mentioned here. See, calculation of capital employed is very simple, okay, and as per your questions, it doesn't come too tough, okay, but still it is advisable to learn the formulas. Okay, the capital employed can be calculated by totaling of the capitals of partners. Okay, if the partners, they have the capital of, let us say, there are two partners, okay, and their capitals are 2,60,000 and 1,40,000. So the total will be 4 lakh, isn't it? So this 4 lakh is only the capital employed. Very simple. Okay, if they have the credit balance of current account also, then add the credit balance of current account. But if there is any debit balance of current account, then you have to subtract it. Okay. Yeah, this super profit method, it has got two approaches. Okay, now depending upon the question, okay, now you have to look at the question, what variables have been given, what items that have been provided in the question. So depending upon the question, you have to choose which method to apply. Okay, because there are two approaches for calculation of the super profit. First method or the approach is average profit minus normal profit, and the second approach is this one, the alternative approach. Okay, average profit minus partner salary minus manager salary minus normal profit. So this approach, as you can see here, the alternative approach of calculating super profit, it is just the extension of this simple method. Okay, as you can see here, average profit minus normal profit. Here also you have average profit minus normal profit, but you have these two items extra, isn't it? Partners, what is happening? Yeah, partner salary and manager salary, these two items are extra here. Okay, now this capitalization method, it has two parts. The second part is very simple. Capitalization of super profit method is very simple. Okay, but the first part of this capitalization method is quite confusing. Okay, because first of all, you have to calculate the capitalized value of business. Okay, or capitalized value of the firm, and the formula is given here: average profit into 100 by normal rate of return, or ROR, rate of return. Okay, or simply return. First of all, you will calculate the capitalized value of business, and then you will calculate the net assets. So I have mentioned here net assets is equals to capital employed, that is asset side approach. Now let us go back. What is mentioned here in the assets side approach. Okay, so what you will write here, if you have to find the value of net assets, okay, you will use the same formula, that is you will use the same formula of asset side approach, but instead of capital employed you will write net assets equals to this total assets minus goodwill minus fictitious assets minus non tradable investments minus outside liabilities. Okay, I hope you know this fictitious assets. Okay, let me just give you one example. Fictitious assets are those assets which do not have the physical existence, okay, but they just appear in the book. Okay, now we have already seen the methods and the formula also. Now it is time for the calculation part. Now, example number one, very simple example using the average profit method. Okay, so calculate the value of goodwill of a firm at 3 years purchase of 4 years average profit, and the profits are given. Okay. So the profits are very simple: 15,000, 11,000, 18,000, 16,000. So first of all, you take the average. Okay. So use the formula. Okay. And get the average profit. Okay. And after finding the average profit, again use the formula of calculation of goodwill, and the goodwill will be calculated. Okay. So this is very simple method. The simple method of this one, this simple average profit method. Okay. Very simple. Now, example number two. Example number two, it talks about, yes, it talks about the same thing, average profit only, but there are some adjustments. There are some adjustments here. Okay. So the example number one was without adjustment, but example number two is with adjustment. Okay. Uh, Let us see this example. Find the value of goodwill at 2 years purchase price of this average normal profit of the last 3 years. Okay. Let me tell you one thing here. In example or in the question, it is mentioned here normal profit, but while doing the solution, I have not used the term normal profit but adjusted profit. Okay. Why? Because you may get confused with this normal profit. Okay, I don't want you to get confused with this normal profit. That is why I have used the term adjusted profit. Okay, so it is very necessary, I'm sending you the PDF files as well as the video links. So it is very much necessary to have a look at the video as well as the PDF items, because for the explanation part. Okay, because the PDF, it cannot explain you on its own, isn't it? You have to interpret and understand on your own. Anyway, now we have 3 years here, that is the years 2018, 2019, 2020. Now this profit of 2018 is 1 lakh, 2019 is 1 lakh 10, 2020 is 85,000. Now let us see the adjustments that are included there. The first year, that is 2018, including abnormal profit, abnormal gain or profit, it is same. Abnormal gain or profit of rupees 10,000. Okay. Now in 19, we can see here after charging abnormal loss of rupees 20,000. Okay. And in 2020, we have including interest of rupees 5,000 from non-trade investment. So what do we do now? We have to calculate the actual profit or the uh, adjusted profit. And by normal profit we mean the actual profit only. Okay, what it should be. So if you have copy with you, I want you to write down some points right now. uh, okay, I think you are ready by now. Okay, so right there in the copy, abnormal profit. Okay, abnormal profit or gain. Okay, abnormal profit, give this number 1 or 2 3. Okay, so number 1, abnormal profit, okay, equals to minus, again I'm repeating, number 1, abnormal profit equals to minus. Now number 2, abnormal loss equals to plus. Okay. Number 3, normal profit equals to plus. Now this normal profit which I talked about is in number 3 is not that normal profit. Okay, it is not the normal profit of this one. It is not this normal profit which you are calculating in the super profit method. It is not that normal profit. Okay. Yeah, number 3 is done. Now number 4, normal loss equals to minus. Till now you have written 4 points. That is point number 1, abnormal profit equals to minus. Point number 2, abnormal loss equals to plus. Isn't it? Now point number 3, normal profit equals to plus. Point number 4, normal loss minus, equals to minus. Isn't it? Okay, if you have confusion, let me know. Okay, just send me the message. I will write and send you the same. Yeah, right now point number 5. Okay, point number 5. Yeah, capital income. Okay, capital income equals to minus. Point number 6, capital expenditure equals to plus. So these are the things which you should know for the adjustment. Okay, because sometimes the profit may be given as this way also. Okay, so you have to uh, find the actual or the adjusted profit of that particular year. So let me take you to this next slide. So you can see here the calculation of adjusted profit. Okay, so in the year 2018, there was the abnormal profit of rupees 10,000. Okay, this abnormal profit is not the normal profit or the regular profit. Okay, so it arises only because of the market fluctuations or maybe because of some particular transaction. Okay, so it is not, it doesn't have the continuum. Okay, that is why it has to be subtracted. Abnormal profit is subtracted here. Now in the year 2019, there was an abnormal loss. So now look at the point number 2. What you have written about the abnormal this abnormal loss? It should be plus, isn't it? So you have to plus the item abnormal loss. Now just now I mentioned that if there is the capital income you have to minus it, isn't it? And capital expenditure you have to plus it. So this non tradable investment, if there is an interest, okay, if you are getting the interest from non tradable investment, okay, keep this in mind. Okay, non tradable investment, there are two types of investment. Okay, number 1 is tradable investment or market investment. Okay, and the other one is called non-tradable investment. Okay, so this tradable investment and non-tradable investment, please keep this in mind, because regarding this there will be an adjustment in the chapter called cash flow statement. So please remember this. Okay, you have to remember each and everything. Okay, now let us move further. This non-tradable investment is actually a part of your asset. Okay, and it is not tradable, so which means it is not current. Okay, you cannot convert it into the cash, you cannot trade about it, you cannot sell this investment in the market to get the cash. So it is actually now whatever the interest you get out of this investment, it is actually the capital income. Okay, so you have to subtract the capital income. Okay, because it is not the operating income. Okay, so I'm saying this operating income, we will understand what is operating in this chapter called cash flow statement. But let me just tell you one example, just one simple example. If you I think you can understand this. Okay, let me take you to a shop. Okay, let's talk about the medicine shop. Okay, now the primary activity of the medicine shop is to sell the medicines and the medicinal equipments or whatever is related with this medicine. Okay, They sell you the masks, sanitizers, they sell you the uh, painkillers, excuse me, they sell you the various types of medicines and protein powders, etc. Okay, vitamins, proteins, etc. So this primary activity of this medicine shop is to sell the medicinal items, isn't it? So this is only called the operating activity. The main activity of an organization is known as the operating activity. For example, the main activity of Coffee Cafe Day is to sell the coffee, isn't it? Uh, Maybe you have body ko dukan, okay, where you go and have aloo mimi, okay. So that body ko dukan, um, you will get aloo mimi and momo, chow mein, and other items, okay. So the main activity or the operating activity of buddy, whoever is the owner of that body ko dukan, okay, shop, so its main operating activity is to sell those items like aloo mimi, momo, chow mein, and other items. So uh, I think you get this point, isn't it? By operating activity, what do I mean by that? Okay, because I don't have much time. That's why I cannot stress on such points. Okay, so you get the adjusted profit here, okay, and you get the total of the adjusted profit. Okay, now this is the actual profit. Okay, so this is the profit that we wanted. Okay, so you will get the average of it. Okay, you will get the average and calculate the goodwill as it is. Now let us go to example number 3. Okay, and this example number 3 is very simple example. Okay, you can see here there are 5 years, and in 5 years we have a different amount of profits. Okay, now the weights are also given. Okay, so why do we have the weight here? First of all, if you ask me, okay, this weight is actually for the purpose of calculation. Okay, it is only a method of statistics. Okay, it is just like the frequency, you can say that. Okay, so we will see this in the next slide afterwards. So let me tell you that the weights are assigned as 1, 2, 3, 4, and 5. Okay, but the weights can be different also. It can be like 2, 4, 6, 8, 10. Okay, or it can be 1, 3, 5, 7, 9. Okay, or it can be anything, any number. Okay, so the weights can be any number. So but how will you apply the weights? First of all, you should see here what is the first year given here. 2015, isn't it? So apply this first weight along with this. Okay, and the second weight with the second year, third weight with the third year, fourth with the fourth year, the fifth weight with the fifth year. So apply this way. Okay, and if in the question, sometimes in the question the weight is silent. Okay, there will be no mention of this weight in the question, but it will be asked in the question that you have to calculate the value of goodwill as per the average, weighted average profit method. Now you will be confused. How will we calculate? Because the weight is not given in the question. So if the question is silent about the weight, what weight you will use? You will use the weight as it is, that is 1, 2, 3, 4, 5. You will use the counting numbers or the natural numbers, okay, as your weights, like 1, 2, 3, 4, 5. Okay, now let us see the solution here. So you can see the data that has been extracted from the question here. Okay, so this you know it already. Okay, years 2015, 16, 17, 18, 19, and the profits as it is mentioned here. Okay, and the weights, as I said, this for this 2015 we will use 1, 2016 2, 2017 3, 2018 4, 2019 5. So the weights have been used as it is. Okay, now you may or may not write this A B C D. Okay, you may or may not, because it will not add or deduct in your marks. It is just for the calculation purpose. Okay, if you do it this way, it will look more nice. Okay, you have to be very much representative. Okay, anyway, Now you are doing statistics, isn't it? So in stats, we find the frequency as well as the midpoint or the mid value, isn't it? And we multiply them. Okay, that is the x or the mid value, isn't it? So we calculate, okay, x into c equals to cf. Okay, so that is the cumulative frequency, isn't it? So similarly we are multiplying. Okay, so multiply this 40,000 into 1, 40,000, 48,000 into 2, 96,000. Okay, this 60,000 into 3, 1,80,000. This 50,000 into 4, 2 lakh. This 36,000 into 5, 1,80,000. So this is how we do it. Okay, and you get the total. You just get the total of this 15 and this weighted profit. Okay, just now you got 6,96,000. So use the formula. Okay, and you get the figure, that is 46,400. Oh, sorry, I made a mistake here. It's not about the cumulative frequency here. Cumulative frequency is not about this weighted profit, but about the weight here. Sorry, I showed in a very wrong way. Yeah, but the concept of cumulative frequency is applied here. Okay, in this weight, not here in this weighted profit, but in the weight. Okay. Anyway, so you can anyway you can see this also, but you cannot exactly use that particular concept, okay, of stats, but the uh, ideology or the main logic behind it is the same. Okay, with along with this cumulative frequency or whatever is in the stats. Okay, then you will calculate the goodwill. Okay, so this is the method of calculation of weighted profit. Okay, you have to know this. Okay, now about this yeah, now we are in the super profit method. Okay, which is very simple method. You just have to calculate the average profit, then subtract the normal profit, and whatever it comes, the value, it becomes the super profit, and get the goodwill. Okay, but still it has got some steps, so I have laid down stepwise. Okay, so read the question, okay, before you look at the solution. I don't want to explain the question here at this point of time. So first of all, what you do, the first step here is to get the average profit. Okay, you get the average profit, you keep it. Okay, 20,000, you just keep it for a time being. Now the second step is to calculate the normal profit. Okay, so you calculate the normal profit, the amount of capital investment. Okay, so whatever you can see here, the capital invested or capital investment or the investment of capital, it is the same thing, that is the capital employed in the business. Okay, so you apply the formula and get the normal profit. Okay, now in the third step what you do is that you calculate the amount of super profit. So the formula of super profit is average profit minus normal profit. So you get the super profit. Now after finding this super profit, what you do, you will now find the amount of goodwill. Okay, applying the formula, it is very simple, but you have to follow the step. Okay, you have to learn the step, you have to know the step. Okay, now example number 5. This example number 5, it talks about the capitalization method of average profit method. Okay, but here in the question, if you just look at the question here, you do not find these words, calculation of goodwill as per the capitalization of average profit method. Where is the question here? Okay, the hint is lying here in this point. The firm earned an average profit of 90,000. So here you can see this term, isn't it? Average profit. So by average profit, we mean the average profit, this simple average profit, this average profit. Okay, this is the profit. Okay, so the firm is making the average profit of 90,000. Okay, and we have one more thing given here, that is normal rate of return is 10%. Okay, Now we have the amount of normal rate of return 10%, and we have average profit. So what method should we apply here? Okay, now see, now the two things are given in this question. Okay, two main hints are given in this question. Hint number one, average profit. Hint number two, normal rate of return. So now let us go back to the formula section. Okay, now looking at the variables that have been given in the question, you have to apply the particular formula. So first of all, you can see here this formula, capitalized value of business. Okay, so you can see here in our question, question number 5, example, sorry, yeah, example number 5, we have average profit as well as the normal rate of return. So we can find capitalized value of business, isn't it, equals to, we have average profit of 90,000 with us, and the rate of return is 10%, isn't it? So now calculate the average, sorry, the capitalized value of business. So the capitalized value of business will be 9 lakh using the formula. Okay, and keep the amount. Okay, find capitalized value of business and keep the amount for a time being. Now again, let us look at the question. Now for this purpose, we need either capital employed or net assets. Okay, again let us go back to the formula section. Okay, yeah, see here, uh, for this purpose, okay, for the calculation of goodwill, we need two things. Okay, for the calculation of goodwill as per capitalization of average profit method, we need two things here. Okay, look at the formula carefully. Okay, because the formula is very much confusing, you have to learn all the formula for all the different methods. Formula is the main thing. Okay, formula is the key to the question. If you do not have key in your pocket, you cannot open the lock of your door. But if you have the key in your pocket, that is the formula, you can access the question and get the answer, isn't it? Ultimately you get the access to the answer, isn't it? Anyway, so you can see here in the formula, goodwill is equals to capitalized value of goodwill minus net assets. But if in the question, if the net asset is not provided, then what you will do, you will find the capital employed. That is why I have mentioned here net assets is equals to capital employed. And if the items of capital employed is not given, then you will write net assets and use the formula as it is mentioned here. Okay, so capital, whether you write net assets here, whether you write net assets or capital employed, it is the same thing. Or whether you write net assets or capital employed, it is the same thing. Okay, so you will now look at this question. Okay, so now we do not have any form of asset here, isn't it? So it is actually the liability side approach. So now we will what do we do is that we will now total the capital of the partners A and B. Okay, total will be 4,40,000. Now this partner A, it has the credit balance. If in the current account or the capital account, if only the figure is mentioned, okay, and nothing is stated out there, which means it is a credit balance. But if in the bracket, if you see here the debit, then it is a debit balance. Okay, but if nothing is mentioned, then it is a credit balance. Okay, because we know that capital and current account, it has the nominal nature. Okay, and their positive side is the credit side, isn't it? So the total will be 2,90,000, that is the total capital employed, minus 10,000. Okay, it will be 4,80,000 capital employed. And you will use the formula, goodwill is equals to capitalized value of business minus capital employed. Now see here again, I will check you to the same formula section. Okay, now here I have used what is written here, goodwill equals to capitalized value of goodwill minus net assets. But in our solution, what we have written, goodwill equals to capitalized value of business minus capital employed, because capital employed is equals to net assets. Okay, so net, whether you write net assets or capital employed, they both are same. Okay, now let us move on to the last section, which is very simple, which is very simple. Okay, and that is the valuation of goodwill applying capitalization of super profit method. You just have to calculate the super profit here. So calculate the amount of super profit here. Okay, but before that you have to calculate normal profit, because normal profit is just wait. Okay, because all these questions are framed. Okay, that is why 1 lakh 20. Yeah, okay, yeah, it is same. Okay, okay, yeah, it is okay. So you have to calculate the normal profit. Okay, and the normal profit will be 72,000. You know the formula of calculation. Okay, of this normal profit, it will be 72,000, and you have the average profit already. Okay, I have not used the term profit, but I have used the term average income. Okay, so for the company or for the firm, or if for any form of business, the income is actually in the form of profit, isn't it? So their profit is 1,20,000 average profit, and from there you will subtract the normal profit. You get the super profit of 48,000. Now what you have to do is that you have to just apply the formula here. The formula is very simple: super profit into 100 by rate of return. Okay, and you will get your amount of goodwill. Okay, so this much. Thank you very much.